So, why are lower interest rates potentially a bad thing for home sellers? And why is it a bad idea to watch the Federal Reserve for its rate decisions and waiting until September? Today, we're going to watch CNBC's real estate expert Diana Oleg explain where rates are going and what's happening with the housing market and a potential prediction. But wait to the end of the video and I'll show you why she's missing some of the most important nuances in this market and why it's probably exactly the opposite of what she's going to say. But before we get into the video, subscribe to the channel, like and share the video, leave a comment on your experience in real estate, and let's get into it.
Day to day, we just showed you the home builders tumbled along with the market, but interest rates also fell, which means that mortgage rates are going to fall. Shouldn't lower mortgage rates help the home builders? Diana Owen joining us now with more on all sides of housing and real estate. Diana?
Well, Brian, mortgage rates did take another leg lower this morning. The average rate on the 30-year fixed dropped 6 basis points to 6.34%, according to Mortgage News Daily, whose COO, Matt Graham, told me lots of lenders will be quoting in the high 5% range today as well. Now, take a look at the drop in just the past week from 6.81% last Monday. That's nearly a half percentage point and more than a full percentage point lower than the recent high of 7.52% in April. Home sales have been falling since April because of that hit to affordability. And that is now improving. Now, just compare. If you put 20% down on a $400,000 home in April, using a 30-year fixed, your monthly payment was about $2,240, not including insurance and property taxes. Today, that monthly payment would be $1,989. More buyers would also qualify for the loan at today's lower rate. Now, normally, news like this would help the builder stocks, but they are all lower on the day with the broader market. Concern about the economy is overshadowing the rate drop, which makes sense, actually, given that for most consumers, a home is their single largest investment. Lower rates are certainly helping affordability, but we are still seeing record high home prices, and nationally, at least, prices are not coming down month to month. So if rates move significantly lower, we could see a flood of pent-up demand from buyers. But I'm sorry to say, Brian, that would only push prices higher.
Okay, well, there you have it. Diana says that as rates go down, more buyers will come into the market and prices will actually go up. She's not the only one that feels that way. So the question is she right? Are the experts right? It might surprise you to know that sometimes when interest rates go up, so too do prices. And when interest rates come down, sometimes the prices fall with it. Why is that, and how does that work? Well, the nuance that she's missing in this particular market is why prices are at record highs. And the answer is because the inventory is so tight. There just aren't enough houses on the market. And buyers waiting for interest rates to go down have caused the market to be a little bit stagnant. And that's why April, May, and June have been so slow for the housing market. In fact, what we're seeing is houses are staying on the market longer and reductions are more common because the market's been moving slowly. But that's starting to change as more sellers are putting their homes on the market and the inventory is increasing. So now, as interest rates go down and the first wave of buyers come off the sideline because it's time to purchase, they will thin out the inventory and prices might take a temporary spike up. But that's going to cause more and more and more sellers to put their houses on the market fearing a potential recession. And in that environment, the increased inventory and the reduced demand will cause prices to go down, not up. So if you're waiting for interest rates to go down as a home seller because you want more buyers in the marketplace, that's probably not a good idea. So take advantage of the market you have, not the market you expect. And that's the best advice I can give you. So in conclusion, we're in a market that has defied most logic. When the pandemic came around, people thought the market was going to crash, and it actually went up because there was a lot of money that was put into the system and people were getting money for nothing. Now that we're in the environment that we're in, and we've been going up, 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 up for about 15 years, it's time for a correction. The only question is it going to be a major correction or a minor correction? Well, that's the video. Thanks for watching. Subscribe to the channel. We really appreciate it. Like and share the video and leave a comment, and we'll see you next time.